Okay, I want to build resources for myself and to help others. How should I do that? Many people rely on jobs to grow security for themselves and giving to others. But because of technology, we need less and less labor to produce all the goods and services people will buy. And we have been paying less for labor as a percent of gross domestic product for decades. But capital invested in a portfolio of stocks has done very well for decades, better than bonds or money in a bank. Owning bonds is like you being a bank and loaning directly to businesses, not loaning to the bank so they get their cut. Owning a diversified portfolio of shares in companies around the world historically has done better than loaning money to those companies. Those firms would not borrow unless they expect the money to help build their company value faster than the interest costs they pay. That is why the equity lines rise faster, though with more volatility. A traditional investment account can help you become financially secure. It works by growing the cash investments you make through investment returns. And what is stored in the available funds can be used today or later to pay expenses. Wealthy people do this. They live on investment returns from their capital and invest more when they can, rather than live on wages. Remember, the earned or wage income we saw is declining in importance to the economy. Adding a checking account with bill pay can integrate wealth management with daily finances. You can pay bills directly from the checking account. The investment funds can serve as a personal endowment to cover some portion of your bills. It is best to set a budget to be covered by investments as some percentage of the assets in the investment account, say 5% per year. This is so we can expect the account and budget to grow over time, but pay some of your bills so you see progress on meeting goals. Charities we work with call this a working endowment, but you too can gradually endow payment of more and more of your budget this way. It helps a lot and is motivating to visibly measure and manage progress on meeting your financial goals. Raising insurance deductibles, which lowers the premium, is one place to get money to start or expand investing. Do that just after or while paying down debt. This also adds permanently to investment cash flow and builds cash to pay the deductibles as needed. Remember, insurance companies are in it to make money. How much do I need to save for how many years to become independently wealthy? These numbers are approximate and have assumptions. Your return may be different. Think about your annual income. If you save 1/10 of that each year and earn 10% returns, you could replace your income in about 26 years and become independent of that income. So live on some amount less than your income and save the difference. Then you will at least be making some progress.